Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis technical show. What happened in the markets today? It was the bearish day. Bears, a bull trap was there, and finally a bearish engulfing pattern. Friends, if you're not subscribed, please subscribe and share with your friends and colleagues so that everyone benefits. So without wasting time, let's look at the markets, and it's a pre-market analysis. So that is for tomorrow, this December 14th, Tuesday, 2021, and we would be looking at all of these patterns that you see on the left side on the charts, and we would have additional data analysis on all of these parameters that you see on the right side. In addition, we would have some look at global markets and commodities, and then wrap with some actionables also for tomorrow. So what you see here, it's a bearish engulfing, right? This big candle red bearish is engulfing the previous candle, and it is gently an indication that markets can drop further down. It's bearishness. And it's also a bull trap when the when the price went above the previous candle and close below that, below the close of the previous candle. Same thing happened here in BANKNIFTY also. It almost engulfs the previous candles and the biggest candle in the last 3 days, and all we have is a gap support downside. Here also all we have is a gap support downside. So there is a big resistance that got hit today. It's 143 points lost in Nifty. And the bearish engulfing has fallen. BANKNIFTY lost 180 points, and it took this about 37,000 near to that. Right. So intraday, what happened? Look at this. It was a gap up in the morning, and then there's a huge fall from that. Right. Same as the case with BANKNIFTY. It was a gap up, and then it's a huge fall. How much was that point? That fall? 100 points gapped up, 280 points, 3 times more fall. 450 points gap up, and then 700, 2 times almost fall. Right. And Bollinger Bands are showing that the distance from the median to the lower band and upper bands are huge. That means you can expect volatility. Both the indices know that width is high, but it is consolidating. Right. Look at the lower bands. Look at the lower bands. So if there is a volatility skews that's happening very slowly. It may take weeks, days. No. But right now, we can anticipate that there can be consolidation in the next coming days. Support and resistance level, everything remains the same. It got trapped and got hit at the 17,500 to 7,600 zones, and above that you have 17,800 and 850 the next resistance, and above that 18,000 the next resistance. Downside 17,350 would be a very good support zone, which is a gap actually, right? No, the beginning of the gap basically. Yeah, so 350 to 400 already there is a consolidation. There is a previous swing low area. It can take the support zone, and then below that you have the gap. So that is 17,300 to 250, that range. So this whole area is a good support. As long as it does not go below the 17,200, should be fine. And if that breaks, then it goes to the 17,000 rounding swing low again. And then if that also is lost, means you get to the 16,900 low, and then below that you have the 16,700 gap support again. Right? That's the support and resistance on the Nifty, and right side of the BANKNIFTY you have 37,400 is where it got hit, and then got the resistance. And the next one after that is 37,800, and after that you have 38,000 levels resistance. Downside support you have 37,100, 36,900, that range. And then if that is broken, is a big good gap support right from the 36,900 till the 36,300. It's a good gap support zones, and then 36,300 and 36,300 you have another good support zone side, and after that you have 35,900 range near to 36,000 would be a good support. If that is also broken, you go back to 35,300, right? So that's the support and resistance for the BANKNIFTY. Let's move on. Momentum, there is no divergence on the short term daily, but you can see that the momentum on the Nifty and the BANKNIFTY is on the sideways trend. If you can see that it has closed out the bullish zones on the sideways, bullish zones on the Nifty and the BANKNIFTY, but on the medium term, it's a weekly, you can see that it is still bearish. You can see that the strength of this is what you see here, a short term daily. So there you have bullishness, but medium term trend is still not changed back, reverted back. India VIX actually shot up 3% and 16.6 is where it is at, right? implied volatility 16.3 and IVP is 46.5, dropped from the 55.60 level. So it was hit earlier. So it was a breakout that happened earlier to the 21 levels, and then it has cooled off since last several days, and I think it has taken a pause near 16 levels, and then today it spikes 3% up, right? Very small spike compared to the big cool offs and the big spikes that had happened earlier. Openness data overall, left Nifty and right BANKNIFTY both are showing that it's dominated by the peers, because that's what is dominant. The call writing is what is dominating. Left Nifty, if you see 17,000 is where the highest support is seen, and 17,400 is where the next. So 17,400 is gone, means you have support only at 17,000. But you have 3 more days for the expiry. And there are some major events also in between. So this keeps changing, but as of now, 17,000 is where the highest put writing, and 7,600 and 500 is where the highest core writing is seen on the Nifty and BANKNIFTY. 37,000 and 36 is where the put writing support is there, and 38,000 and 37,500 is where the maximum call writing is there. 0.55 and 0.63 are all neither bullish nor bearish kind of levels, right? But futures data is showing it's long unwinding, which is bearish, right? People are long going short. But short build-up is what you see for the BANKNIFTY and the futures open interest data as of today, right? That's the open interest analysis. So correlate that with the charts levels, and then you'll get a picture. Look at the heat map today, right? It's all big selling, the major players, Reliance, HDFC, and Bajaj Finance also heavy selling. Bajaj Fin and Bajaj Fin, heavy selling has happened here, and Axis Bank and Techcom is is only probably Wipro also, and so that's all. So overall, it's a bearish that you see there. Now sectoral performance, if you see, it's all red, 0.5% IT gone, metal 0.5%, auto 0.5%, pharma slightly red, FMCG 1%, and 1.5% for reality. So overall, it's all slight bearish. There's no big fall as such, because it was a up move and then a sell off, right? But the thing is, you just can't be long unless you have a shorter momentum that which is in sideways on almost all of the industrial sectors, and just get back to the bullish zones getting go along. Look at the institutional participation. This is a worrying thing, right? Even at this point, in spite of huge selling that has been happening in the last several months, today also they sold 2,700 crores of shares in the cash market, and for some reason DAs keep buying, right? So it's like competing with the Fyers, no? So the moment the Fyers reduce the selling, the DAs also reduce the buying. So today they had increased, and so DAs also increased the buying. So that's institutional participation. A little bit of worry on this heavy selling continuing with non-stop since many days. And look at the dollar index. You can see that it's broken out from the 2 previous resistance and then consolidating, but it is green. So basically, the dollar is strengthening, rupee is weakening. It is also evident from the dollar USD INR currency pair, which is shooting up and heading towards 76 level, breaking out of the 74.75 kind of level. So that is worrisome, because Indian rupee is weakening every time the dollar is strengthening, right? Now crude oil had dropped off, cooled off. Today also it was cooled off. It had bounced last for 5, 6, 7 days, and seems to be consolidating, and then as long as it is maintaining this 70 and 70 below levels, it should be fine. It doesn't go above this to previous resistance back again to the channel top, then it is worrisome. Gold, as usual, it's consolidating, but it's green colored bar today. But this famous, very old support zone seems to be forever, right? And it's part of a handle pattern of the cup and handle for the on the long term basis, right? US markets as of now, there's no big movement seen there. Inflation data is bad, but market did fall. Dow Jones, you can see that it's green, 200 points up, but and otherwise you've seen green all over. There's no major up or down that is seen at this point in Europe markets also. So we'll have to see that tomorrow pre-market once again, just to see if that is reflecting here or in Singapore or any other exchanges before we take a call in the pre-market. actionables, Cummins and Kodak. Cummins is long. Cummins had an inverted head and shoulder which broke out and formed a head and shoulder again on the upside and then fall down, and now it is forming some kind of consolidation and broke out, and then it's heading back to the zone. So there is a opportunity for a swing trade here. Probably it can go and hit back the previous resistance zone, right? So that much move can be captured. Kodak is bearish, so short trade. So there's a head and shoulder on the daily, which is already confirmed and broken out. Now looks like it may get to the next support levels, which can be either 1820 or then further below down 1789 kind of levels. Also, it can go if this is not holding, right? If this is holding, then you get a very short target. Otherwise, you get a long target. But this is a head and shoulder patterns. So that's a short trade. Commence a long trade. Just a wrap up, it's a mild bearish is my view, and neutral sideways combined, right? It's neutral and bearish, slightly bearish kind of view, right? So that's for short term. Not, that could change tomorrow. That's for tomorrow. My view is for tomorrow. So the reasons is because we trapped the bulls today about the indices, and Nifty is bearish, engulfing is very powerful, right? But very long engulfing, very wide range candles. That's very powerful. Most likely there can be consolidation at least, right? But not a bullish move once you see that pattern in normal cases, right? And the crucial zone of 17,500 to 600, no, it could not just climb and steadily above that. That means big bears are there out there, right? So the people there out there ready to sell. Basically, you have to be careful of that zone. So that has to be conquered, is what we had been telling. It's a lower high, lower low that was formed, and only if this 17,550, 600, that level is breached and closed green above that, only then we can say that this correction is over, and then it can further move. It may take some more down move before it can climb that again back. Never know. But all its bearishness gives a view for the market for tomorrow. Looking at the chart patterns, its support resistance levels, and the short-term sideways momentum and trend, right? And in addition, the institution's continuous selling gives me conviction that it may be mild bearishness or consolidation that may happen tomorrow. There is a gap support at 17,300 around that below. BANKNIFTY also has got a good support below the below the place where it is right there now, right? So that could give support, and then it may consolidate or may not fall down too much because of that support. VIX has cooled off last several days. Today it spiked, but it spiked very small. But one thing we have to keep in mind is that there is a US inflation data that is floating around. So people may be digesting that, and then you never know whether reactions could come in later also. There is a Fed meeting that is there in the mid of the week. So all this could make the market jittery either tomorrow or day after or the day on the expiry when the Fed meeting news comes out. So play safe with hedge positions and have tight stops. Keep a good understanding of the support and the resistance levels, which is critical when you have to enter and when you have to go long or when you have to go short, right? So it's very crucial. Always use hedge positions when you're playing options, right? This seems like there is consolidation as per the Bollinger Bands. The fall may not be likely unless the gap support is breached completely, right? Which may not happen mostly as per the Bollinger Bands, right? So that's my view. Hope it helps to form your view and a good trade plan for you for tomorrow. If it helps, hit the like button and share different colleagues so that benefits all. Thank you so much for watching. Happy trading, happy learning. Bye.